Hello everyone. Today I'm going to show you how to open a short Iron Condor position using Robinhood step by step. If you want to brush up on your knowledge on Iron Condors, check out the links in the video description. I'll also be using a Google Sheet tool to assess the trades I come across. Alright, let's open up Robinhood. Now, let me very quickly go over this Google Sheet, which I will make it available. You can use it if you want. So essentially, it's a plug and chug tool. If you get it, you only have to fill out the yellow cells, and then you will be good to go. All right. Step number one: get your Robinhood account. Have about $300 to $500 for trading, because when you sell Iron Condors, you have to have collateral to go with the trade. Most of the trades I place by selling Iron Condors, usual collaterals are about 100 to 250, maybe sometimes 500, based on what stock I'm trading. But yeah, find quality and stable stocks and familiarize yourself, right? So I have some example stocks pulled up, such as Home Depot, Microsoft, Apple, AT&T, robust stocks, right? You don't want to trade Iron Condors with stocks like Tesla or American Airlines, like, because they're very volatile, and you don't want to deal with that. You want Iron Condor is a is a strategy where you're not really bullish or bearish. You want the stock to stay where it is and just hover around. All right, so let's say we'll first go with Microsoft. So in here, you can just type in Microsoft, and it'll populate its current price. So you got to do your due diligence to understand that, what are some possible movements Microsoft stock can have in both directions. How much can it go up and how much can it go down over a certain period of time. That time period is your days till expiration, right? So you want to have you want to sell options that has about 30 to 60 days till expiration, because that's when you get very good, you can collect very good premium, because you have a decent amount of days till the option will expire, and you also want to ideally close your position before the option expires. It doesn't really make sense to wait till the option expires, even if it's working in your favor, because your collateral is locked up. So you rather just close your position with a certain amount of profit, maybe 25 to 50%, and just close your position and start a new trade. With Microsoft, I'm very confident that the stock is not going to hit $250. It's not going to cross like $235 over the next 30 days. That would be insane. Its market cap would probably hit like $2 trillion. That's just not going to happen while this current pandemic is going on. So anyway, this is how this picture can help you kind of understand how Iron Condor strike prices are, where they are, where you want the stock price to be. So right now it's at 206.26. You want to find the short options, and you want to have at least greater than 84% chance of profit. So let's look at Microsoft. Here we go. Okay, you want to start with buy and call. This is where we are right now. So let's say it's at 206. Let's go up $30. About $30. Let's pick 230. Okay, so this we're buying this, so that means we have to pay for it. So let's put 230. Now we're going to pick, we're going to sell a call. So switch to sell, pick the closest one. If you pick something more further down, the width of these call options are going to be bigger. That means you're going to have more collateral. So for a small account, you want to pick the closest one. So I'll pick 227. So this is a bear call spread, and you will have a net credit of 58 cents. Let's put the price in. A strike price, sorry. Okay, and now we need to find this one. Let's try to find something that has at least 84% chance. So switch to put. We are selling a put. That's under stock price. Let's go exactly $21 under 206.26 or current price. We can actually just select it here. Okay, let's go. Somewhere around here. Let's see. What would 187.5 give us? About $18 away from current price. Now let's go with 185. Okay. Let's sell the 185 strike. Actually, you have to also pay attention to the prices. I have to, if I buy this put option, this costs way more than the put option I'm selling. So I don't want to do that. So pick 187. This has a much higher price, and since I'm selling it, that's good for me. And then buy it. If you look at it, I still have a very close to 84% chances of profit. I mean, 81% is not bad. And then you buy the one very next to it, 185. Okay, so we have 230, 227.5, 230, 227.5, and 187.5, and 185. Okay, so we have about, from current price, we have about $21 for Microsoft stock to go up in the next about 30 days, and it has room for about $18 to go down. And we want this to stay within these two strike prices. Okay, select one. So it's about 250 collateral. So put in 250 collateral here, and the minimum credit, you select credit because you're selling. Limit price, you can, I'm pretty sure you can fill this order for about 125 or 125. Credit. Okay, so this is the order summary. If you can place it, I'm confident it'll fill in. So 125. So this is the premium we're collecting. Okay, so as you can see, we're collecting about 50% of the collateral, which is very good. You want to have at least, you want to collect at least 33% off the collateral. So these are the break-even prices. That means you want the Microsoft stock price to stay in between these two prices, and these are green right now because the stock is already in between these two. If it goes under 186.25, it'll not stay green anymore. And that's the spread width. As you can see, I mean, it's 250 for the calls, 250 for the puts. That's it. That's all you have to do to open a short position. Notice how all of them, they say you're opening, right? So let's say you place the order, right? The market's closed, so it's just going to be queued. So you place the order, it goes through. All you have to do is monitor the option chain, right? Monitor your position. If the stock price stays in between your short option strikes, this option value, this Iron Condors value, will decline over time as you get closer and closer to expiration. So since we're collecting $125 premium, let's say you finished 15 days out of the 30 days. At that point, if everything goes well, this option will probably cost you about 60 or half of the price, right? So maybe it'll cost you about $60 to $70 to buy it back. That's probably a very good place where you can just buy it back and close your position, and then replicate this process again, pick it 1 month far apart, and sell an Iron Condor again, right? Essentially keep using the money you have, place a trade. This way, if you have about $1,000, you can place up to 4 trades like this. And when you place 4 trades, you're going to collect enough premiums to immediately place another short Iron Condor position. So this is a very good way to have some recurring income coming in and not take too big of a risky position. So yeah, that's the way to go. I'll share this Google sheet in the description if you want. Feel free to download and then make a copy so you can start doing your own stuff. All you have to do is just select the ticker, change the prices, play with it, make sure you're comfortable entering the trade, and then that's it. Thank you for watching. If you like the video, please subscribe.